Hello, welcome to the European Open Briefing for Thursday, August the 3rd. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So the dollar downtrend is showing no signs of coming to an end. Yesterday, the dollar index hit a fresh 15 months low, although it is a little bit firmer this morning. The dollar's weakness led to the euro breaking above the 1.19 level for the first time since January 2015, and the pound also hit a fresh 10 months high, although both currencies are steady this morning. Later today we have the Bank of England policy decision, followed by the press conference by the Governor Mark Carney, and a look at the latest quarterly inflation reports. All of that is going to be important given the recent hawkish remarks by Bank of England policy makers. But despite the dollar weakness, the Aussie and the Kiwi appear to be struggling. Both currencies are down this morning, and in commodities, oil also opened low this morning, although yesterday we did see a bit of a rebound after US inventories showed another decline. But let's begin with the US dollar. We can see in the chart the dollar index has been drifting downwards this week, and that 15-month low we had yesterday. It is currently trading just below the 93 level. Dollar yen, though, it didn't hit a fresh low yesterday, despite the dollar declining against other currencies. It actually attempted to break above the 111 level. At the moment, it's trading around 110.60. That's mainly due to yen weakness as a result of the risk on sentiment. We did have the ADP employment report yesterday. That's the private industry survey, which is usually an indication of the official non-farm payrolls that are due tomorrow. They came in at 178,000 versus expectations of 185,000, although there was an upward revision to the prior month. We also had a couple of Fed speakers. San Francisco Fed President John Williams, although he's not a voting member, he signaled that September the Fed will announce its balance sheet reduction plans, and he also sees one more rate hike this year. Cleveland Fed President Loretta Mester was a little bit more hawkish as usual. She seemed fairly confident that the current soft inflation patch is transitory, but that she will want to see more data before the September meeting before making up her mind about another rate hike this year, or potentially as early as September. Moving on to gold prices, we can see yesterday they had started to trend upwards before going down again. They had reached on Wednesday a 7-week high, $1,274 an ounce, and the reason why the gold has come under some pressure since yesterday is because of the US stocks once again heading into record territory. We saw the Dow Jones closing above the 22,000 level for the first time on the back of strong earnings results. So that mainly has caused some downside pressure on gold. But overall, despite the improving risk on sentiment and reduced volatility in the markets, gold is being supported by the political turmoil in the US, and also the declining expectations of another Fed rate hike this year, but not just this year, but potentially a much shallower rate hike path in the US, which is weighing on US Treasury yields. But despite the record close on Wall Street yesterday, shares in Asia are down this week, mainly due to profit taking on technology stocks, and European shares are also a little bit weaker this morning. Moving on to European currencies, we can see the euro did reach just about break above the 1.19 level yesterday. It's currently is back though. It's currently trading around 1.1840. The pound hit 10.5 month high, 1.3250. It's not trading too far from those from that high. It's currently around 1.3230. Although against the euro, the pound is stuck near last week's 8 months lows around 0.8950. The main focus today will be the Bank of England policy decision, where we're going to have the latest announcement, their meeting minutes, and the inflation report. So a big day for traders, as it's going to be a lot of data to digest. And given the 5-3 split vote we saw at the last meeting, it's going to be interesting to see now that we have a new MPC member on board, which way the vote will go. If we see more signs of hawkishness within the MPC, that would potentially lead to fresh highs for sterling. Quick look at the Aussie and the Kiwi, because here we can see the daily chart that last week both currencies made 2-year highs. They've slowly been drifting downwards since then. We had the RBA policy meeting earlier this week, where the RBA was rather concerned about the impact of the appreciating exchange rate, and today we had trade data out of Australia which showed a smaller than expected surplus in June, so that is weighing on the Aussie. It's currently down 0.5% against the greenback. The New Zealand dollar is also trading low this morning. Yesterday we had slightly disappointing employment numbers for the second quarter out of New Zealand, and yesterday's bi-weekly dairy auction saw a drop in dairy prices by 1.6%, so that's why the Kiwi has also come under some pressure. The focus next week will be for the Reserve Bank of New Zealand's policy meeting, where they may potentially signal a delay in as to the timing of when the rate hike will come there in New Zealand. Looking at commodities, in particular oil prices, we can see that yesterday we saw some rebound from the prior day's losses. US inventory data showed US stocks were down 1.5 million barrels last week. That was the 5th straight week of declines, although this was slightly below forecasts of a bigger 2.9 million drop. But looking at the actual inventory numbers, US stocks are actually at the moment below last year's levels, signaling a tighter US market. But on the other hand, we are seeing continued strong production out of OPEC and Russia despite the output cap deal. And this means that next week's 2-day meeting for OPEC in Abu Dhabi will be important, as they will be discussing compliance to that output deal. US crude at the moment is trading around 49.17. It has come off the this 2 months highs early in the week of above $50 a barrel. It's looking like a very busy calendar day. We had the final Eurozone PMI readings for July, which the services was unchanged, but the composite was revised slightly lower from 55.8 to 55.7. We've got retail sales for the Eurozone coming up shortly for June, and of course the Bank of England policy decision. In the US session, we're going to have the weekly jobless claims, the market services PMI, the factory orders, and the all-important ISM non-manufacturing PMI, and of course Mark Carney's press conference at 11:30 GMT. That's it from me. Thank you very much for watching, and have a great day.